Welcome to Drill Earnings with quarterly results out from NVIDIA. This is one of the 50 most important technology companies out there. That's what we cover here at Epistrophy Capital Research. But this might be the most important technology company out there. It's certainly driving a lot of things, but not a stock move. I look at the stock move after I look at the business here, but this business is going great. Q4 earnings from NVIDIA, a little bit better than estimates. Their top line number was 0.4% below my estimate, so I'm going to call it kind of right on. Well, their earnings were actually really a lot stronger than Wall Street was expected here. But let's dig into the actual numbers here. Who cares about whether or not the analysts can get it right? Let's look at what the company actually did. So we saw $39.3 billion in revenues. That's up 78% on a year-over-year basis. Think about that. 78% more than the biggest quarter ever from any company ever. Yet that's what's happening over at NVIDIA. So forget Wall Street expectations and look at what's actually happening here. Fantastic quarter with unheard of profitability. Operating margins, the margins that really matter, of 61%. Just fantastic profitability in this business. Let's look at it two ways. Let's talk about where they're selling into, what the chips are being used for. But first, let's talk about where the chips are being sold. So what's interesting here is that while the US is the biggest market, 55% of revenues in this quarter, interestingly, China is decreasing, or at least at 13% of revenues kind of hanging in there. But again, fantastic growth, because what we've seen is great growth in NVIDIA. So if China hangs in at 13% of revenues, it's a lot more money going into China, despite export controls. So where's the difference? Well, the difference, interestingly, is in Singapore. Singapore is emerging as a market that they didn't even used to measure. Now they're measuring it in size. And it was interesting because in the last few quarterly filings, they don't talk about it in the conference call, and they also mentioned in the 10K filed today with results during the conference call. I quickly went to that to try to get these numbers. They said the chips sold to Singapore aren't sold to Singapore. What does that mean? That means that their billing is happening in Singapore. It's not in China because they would say so, but it suggests that other purchasers are maybe purchasing the equipment in Singapore and shipping it elsewhere into places where it is legal to do so, but maybe elsewhere in Asia. We don't really know. But as China has kind of grown with the rest of NVIDIA, Singapore has grown a lot faster. Now let's talk about where they're selling into. What we've seen about where they're selling into is they're selling into data centers. Gaming is not important. Professional virtualization and auto, not really that important compared to what's happened in data center. Data center is over 80% of their business. And indeed, it's just dominating what is NVIDIA. It used to be a gaming company. It is certainly a data center company. And it's been a very profitable one at that. So how did the stock react when the numbers came out? The number of the stock went down, the stock went up, the stock went down, the stock went up again. And then it kind of ended up flat. Interesting, after rising 68% this year, I guess they will take flat, then a big disaster. And indeed, what a rise for this great big company in 1 year. And again, the margins, when we think about this in a contextual basis, so operating margins of 61% for such a giant company is just jaw-dropping. Compare that to their one-time competitor, Intel, maybe future competitor, hard to imagine here. Intel did 3% operating margins, and that was better than they've done in a long time. This company, NVIDIA, just doing great here. Big question I had going into the call technologically was, while NVIDIA was dominating the training, the building of these massive large language models, what about the use or the inference from what you had gained in these large language models? Does NVIDIA have the same big role in inference that it did have in training? And Jensen Huang, the CEO and co-founder of NVIDIA, made the case that there's other aspects of training. Training isn't just one thing. There's pre-training. There's training, there's post-training, there's even test timing and scaling of these models. So there's a lot more to do with training. There's a lot of new training that's still going to happen. And yes, there's room to use Blackwell for inference too. He thinks they've got a long, long runway here before we exhaust the uses of Blackwell. Here's Jensen Huang.
We designed Blackwell for this moment, a single platform that can easily transition from pre-training, post-training, and test time scaling. Blackwell's FP4 transformer engine and NVLink 72 scale-up fabric and new software technologies let Blackwell process reasoning AI models 25 times faster than Hopper. Blackwell in all of its configurations is in full production. Each Grace Blackwell NVLink 72 rack is an engineering marvel. 1.5 million components produced across 350 manufacturing sites by nearly 100,000 factory operators. AI is advancing at light speed. We're at the beginning of reasoning AI and inference time scaling. But we're just at the start of the age of AI.
So there you have it from the man himself, but what's it all mean? What's your big drill down earnings takeaway? What's the one number that tells us a whole lot? I've got all that. So Q4 earnings from NVIDIA, such an important quarter, a great quarter from this company. Wall Street looks at it just in terms of expectations, and it was right in line with expectations of Wall Street analysts, including me. But what's really interesting here is just the growth. A year ago, it was the biggest quarter any company had ever done, both in terms of revenue and profitability. And here we sit now, it's up 78% on a year-over-year basis to $39.331 billion in revenues in just 13 weeks. Just fantastic, just a fantastic quarter from this company. Indeed, up 12% from the last year, and very profitable. And gross margins were great, but maybe the reason the stock isn't up so much is because while gross margins aren't the obscene 79% they were last quarter, they were only 73%, that is a decline sequentially. And maybe some people on Wall Street would think they keep taking profits from all their customers as much as they can. I think that might be bad business for the long term. I've been talking about this for a year now. Their customers might get mad about big gross margins. They brought gross margins down a little bit, even though they're selling this stuff like crazy, and that's likely to continue going forward. Probably good business practices from NVIDIA. Still lots of profits to be had for these guys, but maybe explains why the stock didn't explode in after-hours trading, despite being up at 68% in the last year. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson, and please subscribe to our channel on YouTube, where we've got lots more.